Right, I usually cover precious metal sector and commodities, but this time it will be the large caps for a day like today, where the Fed just pillaged the market. So this is Wednesday, the 21st. The Fed just had its interest rate decision, 75 basis points. It was expected. Powell usually doesn't like to surprise the markets anyway. So it was pretty obvious that he was going to do 75. I mean, why do 100 and possibly tank the market when 75 is going to sufficiently tank the market, which is kind of his plan anyway. But without being able to be blamed in case it over tanks, if I can say that. So we close at the low of day, so pretty ugly. Doesn't get worse than that. This is the SPY. We'll still cover. We're going to cover the main four market indices and the VIX before moving to the large caps, but basically minus 1.7% across the board. SPY, the Nasdaq, just totally mirrored charts. The Dow is actually underperforming, I would say, because we're already testing the July 14th low, whereas we're not there yet, although we're very, very close. And the Russell 2000 uncharacteristically is actually outperforming. Usually it would underperform, especially on the way down. So yeah, market's down. We're gonna test the I wouldn't say the June 16th lows yet. We'll probably test the, let's call it the early July lows first, then bounce, then test the June lows, then bounce, then new lows. That's my prediction. The VIX closed at a new high. I mean, at least a new high for the last couple of weeks. We also tested 30, which was something I predicted, and closed almost above 28. That's what I was looking for because this has been good resistance. I think if we do go and test 30 or even if we close above 30, I think 32-ish, maybe even a bit above will be resistance. You can see this downtrend line. So VIX will have a lot of resistance. In fact, VIX in general has had a lot of resistance for some time, totally underperformed. But I think if we start testing those lows, we're going to be testing up here. So yeah, that will just give extra credibility to move lower. Now, with all that said, very quickly, the dollar, very strong, just like yields, closed at a new high, 111.35. I mean, even on the weekly, even the monthly, we're very extended, but we closed above this ascending resistance. So it's just no reprieve. We're marching towards the 118, 120 level. To be honest, cash is king. The dollar is king out of all the FX currencies, and all the other currencies are just getting destroyed. The euro is below 99. I mean, they're all getting crushed. I think just the ruble and the Brazilian real is the only currencies really to be outperforming the dollar. Otherwise, the dollar wins. I go over that a lot in my other videos, especially when I'm recapping precious metals, gold, silver, kind of the inverse to the dollar in many cases. So dollar up, markets down, yields up, especially the short end, 1 year, 2 years now also cracked 4% following the 1 year, 5 years also moving up. And then as we go further out into the yield curve, it's below 4%. You can see it's total inversion. The 10-year is, it's taken out 3.5 a few days ago, 2 days ago. We're still closed above 3.5. There might be a bit of a drop, but I think the damage is done. We could retrace a little bit, but we keep going up. Those people who said buy bonds, it's a good play. You get appreciation by buying bonds and a bit of a yield. Not really. Bonds keep going down, and the yield doesn't make up for inflation. So that 60-40 portfolio has, that strategy that's been working for years, not working, in fact, really getting demolished this year, and continues to be the case as stocks go down and bonds continue to go down with yields going up. So yields up, markets down, dollar up, VIX up. Let's look at large caps, which I rarely do. Now, this is in no particular order. These are sort of the main large caps that I'm watching that have been pretty much destroyed. I haven't really gone over the order that I'm looking them in. Zoom made the list as it's been crushed. There's no point looking at the weekly. I mean, what can you say? You know, a good company just destroyed. Could obviously go lower, even if it's gone to the types of lows that are not even on the charts. It's still going lower. I mean, there is no bottom. You can always cut something in two, like a worm. It can always go down 90% every day. So I mean, it's not going to go down 90%, but well, actually, we might almost be at 90% from the highs. But this is a credible stock. You know, that's why they're on this list. I think really, if we go down a lot more than 60s, low 60s, but otherwise it's already a buy. It's been a buy for some time because it's a decent stock, but the market's going to test its lows. Zoom will keep going down. If the market bounces, I mean, the Zoom will probably go down 1 or 2% every day with the market crashing 1 or 2%. But then as soon as the market goes up 1 or 2%, Zoom will probably be up like 10, 10% on the first real bounce day. So it's a good time to accumulate, buy, and then sort of leave a buffer of 10%, 5, 10%. Depends what your strategy is. I'm not buying large caps right now, but I might. But I'm really just, I've got my own positions in my own precious metal stocks and a few other stocks, but I've got a lot of cash, but I'm about 50% in cash. I would love to deploy that, but it has to be at the right time at the right stock. Zoom would probably be the right stock, but I'm just so adamant that we're testing the lows that I'm just going to be greedy and let it fall. If it reverses and goes up, whatever, I just got greedy. But Zoom, I think, is a good buy. I just think you can get it lower. Peloton, very similar looking stock. I thought it was quite strong over here because it was up on a down day, but as the market goes down, look at this, now down 6%, basically 1 day away from testing its lows, totally coinciding with the market. So I would say similarly, you can get this lower. DocuSign, very ugly. I thought it had a breakout here. Didn't, went to new lows, gapped up probably on some news. Now we're already at the lows. Probably at new lows tomorrow if the market's down. Palantir, I think it is. Yeah, I think that's been in the news a bit. Nothing very bullish besides the fact that it's been crushed. But like I've said, everything can keep going lower. So this will probably take out its $7 tomorrow. Although it did close green today, so that's pretty bullish. But you know, you can see it retraced the whole move up. Why did it lose all of this move up? Well, because the markets went down. So I think markets will keep going down, and so will this. Teladoc completely closed at the lows. This another one that will keep going lower. And it's, yeah, you do have some prior chart history to judge that. Alibaba, I mean, it's lost its ascending support, just, you know, destined to go below 80 tomorrow. I think this is the best company so far. I'm not an expert in all the micro analytics behind all these businesses, but Alibaba, you know, the Amazon of China, real company. I mean, it's been crushed compared to Amazon. It's been crushed. So I think you can pick it up here, maybe even lower if the market keeps going. 60s, wow, that would really be a good buy long term. In fact, I think that emerging markets, not that China is really an emerging market, although I think the WTO classifies it as that. But anyway, I think emerging markets will really outperform the US in the next 10 years, you know, within the next 10 years. So that's another added benefit of being in Alibaba. Although at the moment, Chinese stocks are not that well poised given the sort of SEC's regulatory stance. You know, with all these Chinese stocks that are like, a lot of them are shell companies, frauds and all that. So the Alibaba is probably tier one when it comes to Chinese stocks. What is it? Virgin Galactic. I mean, this is a crazy stock. You can see the volatility, massive swings. Some people talk about bankruptcy. I wouldn't say that yet. It's it's what's his name, Richard Branson. So he could pull a rabbit out the hat and just see this thing pop. What's this little trend line here? Even just on technicals, this could pop massive. So this one, I mean, I wouldn't buy now. It's not got any technicals to suggest it's going to curl yet. But I think if it stops going down and takes out this line, I would probably buy it for a nice, I don't know what it could do, 20% move. But it's completely taken out its past history. So you'd really have to zoom in and just sort of judge on an intraday breakout, I guess, more of a day trade. Unless you really follow the stock well and you think that there's some news or a catalyst or something coming out. I'd probably avoid it though for those looking for long-term investments. Again, unless you know, well, Roku, what is this? Some streaming Chinese stock or something. Yeah, totally destroyed, hitting its lows from March 2020. Quite a few stocks are hitting their March 2020 lows or thereabouts. You know, one day away from testing its lows, but I think it's done quite well recently. So maybe worth a nibble here and then give it some room for a flush. It depends on your thesis, but I think it's pretty safe bet around here. But you've got to be ready for the market to take it lower, take all of them lower. You know, I don't care how good any of these stocks are. The market goes down, tests it lows, or goes. I mean, imagine that. I think it's going to happen that the market just breaches its June 16th low and starts to just flush down. What's gonna stay green? You might have one or two stocks with good news or something. If the market's going to go down another 10%, whatever stock you wanted to buy will be lower. Even if you think they're cheap, they can get cheaper. You can get panic selling, liquidations, just aggressive shorts. It just takes a life of its own. I've seen it happen. It's quite a few stocks I thought they would just never go lower, and then you see them 28% lower 3 weeks later. It's crazy. Netflix, very, very strong. Recently, very strong. I mean, look at that. I remember this was the bad earnings or whatever. It goes lower, looks horrible, finds support, breaks out of its downtrend, hovers around this 248, let's call it, or 250, why not? Now we're looking at a triple top breakout. The only reason it failed is because the market goes lower. It really wants to go into this gap zone. If it does break out 250, how much of a moves out? Yeah, it could do that over several days. But then again, if the market goes lower, you will see at the bottom of this area 217, about 220, or just below. And if the market breaks new lows, I think we're going to be underneath 220, underneath 215. We'll start going down to the 200 and below. Yeah, easily. So strong stock, probably a very good one for a bounce play because you know it's got good support. It wants to break out of this zone. It's just going to be forced lower if the market goes lower. So, and then you'd have good support here too. So Netflix, if the market starts to flush, it's probably a good place to park your money. I don't know about long-term investment wise. I'm not into all these streaming companies. I like to watch Netflix too, but you know, putting your money there, I don't know. A lot of amazing companies are cheap, and do you really want to own something which is just online viewing when inflation is going wild and people have to choose between watching movies and eating food? And I think they'll probably choose the food. So long-term investment, it's not my cup of tea, but you know, for a little swing trade or a bounce could be good. Robinhood has been strong recently. Actually, today was hardly down. I think another one of those stocks that really wanted to go green, but the market forced it lower as we closed at low of day. Still holding the ascending support. Could be a good bounce play, but then again, I feel like the market goes lower, and if we lose ascending support, and ascending charts are usually the weakest because as soon as you crack it, they're sort of forced to go lower, probably to $8. Yeah, you could buy a little bit, but you know, markets go lower in my opinion. So I probably prefer Netflix. There's just more support if there's a small move lower, because Robinhood just goes a little bit lower and you're straight away, you know, you've lost the main technical trend line. So I probably prefer Netflix in that case. Intel, very good company, very bad stock. Bleeding doesn't stop. This is good support zone, but at the moment it's closing low of day like the market. Selling hasn't subsided. I think you could get it at 25-ish. Yeah, 25 to 26 would be possible. How much of a move down is that? 10% when it's already bearish. I think this could bounce pretty aggressively though. Yeah, as soon as it takes out some of these, you could bounce easily. Probably mid-30s is resistance on a bounce. Yeah, Intel looks pretty good here. Although it's lost its ascending support, the one going back to 2009. So mid-30s is definitely a sell point too. Yeah, I'd probably buy. I'd wait for the market to go lower, buy around 25, just above. And then if it keeps going lower, buy around 20. Just great accumulation. Then if the Fed pivots, which it eventually will do, you have a very nice average, strong amount in a good company that will survive. You know, it's not going to go bankrupt. Not this type of company. So yeah, this is a good one actually. I'll move it down my list. I like it. Snapchat, not my kind of stock, but it's been crushed enough to look at 88%. Wow. Not at lows, okay. It's not at its lows. Let me just zoom in a bit more. Unlike a lot of other stocks that are just sort of hovering just above their all-time lows. But you know, minus 2.5%. One more down day, we're at 10. I think this is the kind of one you can buy if the market's turning, because it will probably move quite a lot. But if the market's really going to go down, yeah, then you can get it at 8, you can get it at 5. I just don't believe in this company's business model. There are too many of these social media companies. I don't really follow them that well, but it's not the kind of one I'd want to be investing in on the way down of a market crash when you have so many good stocks with more viable long-term businesses. So I think if you follow Snapchat, right? If you follow Snapchat, then yeah, you could buy some here, but then leave. I mean, if you buy some now, I understand why. Although I think the market's going to go lower and you can get it lower, but you could buy some now and then leave some for a move to 8, because you could just get a nicer average and then another, and then buy some more if it keeps going lower, and hopefully it doesn't go bankrupt before the market turns, because I don't know how viable this is long term. Maybe it gets acquired, but it has been destroyed. So, you know, down when you're down 88%, a small move up is like 20%. This is probably a better day trade or swing trade than a long-term hold on the way down. Nvidia, it was green on a red day. You can see it wanted to be green. That's a hell of a move down. Let's see the 3-minute. Nice move up, forced down because of the market. I think I've covered this one not too long ago when I did my last large cap recap. This is strong around here. This is a hold if you have it. This is a buy if you don't have it, at least one tranche. This whole zone, yeah, this is why I put these little circles here. This is the low of the zone. This is an area I thought it might get to, which it kind of did. I think it was around there. Yeah, it must have just got there. So well done if you bought on this day here. But otherwise, it's at the same area. I mean, this whole thing is, whether you're buying at 127 or 131, it's the exact same thing in the grand scheme of things. You have good areas of resistance on the way up. The old high now is probably, oops. Yeah, the rest is still valid. Very good company, being destroyed significantly for a company of this caliber, 60%. I think you buy it here or you hold if you have it. And then if the market keeps coming down, yeah, although it's strong and should go up, it will test its lows. Let's say 127-ish, and market keeps going down, it'll keep going down along with all the other very good stocks that have been oversold. So you could get it at the low 120, 115, and then don't touch it. Don't touch it. It could get to 100, and then it could get to 80, 81-ish. That would be a great buy on the way down. Just machine gun your way in pretty heavy. Space it out though, but strong. So yeah. PayPal, been strong for a while. Good news. Just forced lower. This is a bit like that Netflix, you know, you could actually see it forced down to its prior sort of chop down here. This is good consolidation, so good support. But PayPal is like a more matured version of a stock going through the same chart pattern. So very good, wants to go up, good news. But sorry, the market is just pushing you on the water. And then before you know it, you're going lower, even though it probably doesn't deserve it. This is a good stock. I owned it here on the breakout. I played this, sold at 88, and then missed this. You don't need to capture the whole move, just enough to make good percentage. So I like this one, and I'd love to buy it lower than when I sold it. And again, I think the market's going lower, so I could probably get it below 80. But I'm in no rush. Groupon. I didn't really want this to make my watch list. I just sort of follow one of the traders that put it on his watch list. Yeah, I mean, and I think the chart is just total destruction. Yeah, I just prefer the other businesses. Groupon is not ideal. It's the type of stock that company that might even go bankrupt during this recession slash depression slash stock market crash. So very, you know, closed at lows, won't take much to go to its all-time lows and then keep going down. I've seen those types of stocks that just make new lows and just keep going down. I don't like, in fact, you know what, see you later Groupon. Probably good for day trade, but a lot of these very good companies will make very good day trades too. So AT&T, this is a new one to my watch list. I saw it the other day and just thought, wow, it's crushed. And it's basically, it could, I think I drew this line today, it could go to 14-ish, 14.5, let's say, which is multi-decade lows. So I think AT&T is a bit of a buy pretty soon. Like, okay, now it's a buy basically, and then you can buy again when it gets there. But I'm just really, I saw it today, and in fact, I saw it after market close. And I just feel like this could go easily down 10% when the market goes down, which I think is going to happen. And then, to be honest, you just set it and forget it. You just buy around 14 point whatever, 51, maybe just 15, in case you miss it at 14. You just buy and then you just walk away, never look at it again. I don't know what dividend it pays, but I'm in this for the capital appreciation rather than the dividend. But yeah, it's just interesting. It's just interesting. You get these stocks like AT&T that are established and reaching all-time lows of multi-decade, you know, since 94. That's pretty impressive. You could see it had difficulty to get up 32. It's not going to be the one that moves up the most, but it's one that will not go bankrupt. And I don't, if it does venture below this level in a crash, it'll probably quickly retake it on a bounce. So yeah, it's an interesting one, you know, very defensive. Let me just move it closer to Intel. It's just a bit special, unlike all the other stocks that they don't go that far back. AMD, another good one, like Nvidia. In fact, they should be close to each other. Very, very strong support where it is. But it won't take much, but like the AT&T stock, won't take much to take out this neckline. If you want to call this a shoulder, and this the head. Kind of large scale head and shoulders here. But if we zoom in a bit more, we've got this long ascending. I mean, this is rough. It doesn't need to be that precise. And if I do make it more precise, it hasn't lost it. So you could, this is very good support. So if you're into AMD, and I know a lot of people like AMD, and I remember watching it down here, like before the March 2020 lows, I thought people were crazy to keep buying it. And then look at that, just well done, bulls. Very good stock. You could buy it here and then leave some space for it to go down to 60 when the market goes lower. And I think it would do that. It's just, if you're ever going to buy it, or if you're ever going to buy your first tranche, it's now. You know, it's at its lows, closed at low of day though, but at its lows, almost multi-year. But is that March 2020? This is March 2020. 40. Yeah. Yeah, but very good company. So I say you accumulate here if you like it. But I like it. I'm just gonna wait a bit more because I've got other stocks that can that I think are better buys at the moment. But this is a good one for long term. PayPal I already covered. Under Armour. But just to finish on AMD actually, so I would buy here, leave some for 60. After that, I would leave it and watch the general market if we're going lower than 60. But you know, then it's probably going to be 40, probably in $20 increments actually. Nice and simple. This would bounce a lot on a you know, if the recession slash depression ends and the Nasdaq starts to soar, AMD is one of the big boys. And I mean, crypto is bouncing too because the chips they use are also AMD related. So this is a great bounce candidate. And actually, if you buy it here, I bet you in 1 or 2 years it's going to be all the way up here, 150. So not the worst to hold on a crash. So Under Armour, not the best chart. At its lows, closed at the lows. I think by tomorrow, very soon at its March 2020 lows. Not looking good. In fact, I don't like this stock because as soon as we're there in 1 or 2 days, we're at new lows with no chart history, and there are other better stocks around. So goodbye. OSTK, good company. Look at that move. I remember trading this here and getting out there for the huge run. But I also shorted it very well after. But my God, did I miss this huge move. These trend lines are from when I traded it back in the day. Oh, I almost don't want to see that. Out before the big run. Anyway, very good stock. Crazy chart though. I mean, not just this, but you know, it sort of breaks out of this zone and then comes all the way back down with the market. And now we closed at absolute lows of the last sort of local area. And now I don't know how low we go, but this is one to really watch because if it survives the crash, the recession, and the inflation and everything, we can see how it can move. And it moved with crypto here. I mean, that is a monumental move up. You know, let's just take an average of the middle of, yeah. So I would not buy this now, but my God, would I buy it if it gets sort of 10 or below. So that's why it's on this list. Fedex, very bad news recently where I just said the truth. Just said, look, there's a global slowdown and they notice it in their own volumes. So thank you for telling the truth. Got smashed in the face. Closed at low of day again today, which isn't surprising when yesterday it got slaughtered. Then today, if the market's crashing, then it's too early for it to bounce. So To be honest, if we look at this, probably close the gap. So probably get to 140. Even if the market doesn't close red tomorrow, probably get to 140. Maybe 7% is asking too much. But if the market's lower, yeah, probably close the gap. I think you can, if the market crashes, it probably won't get all the way down to 110 because that's a bit too much of a move too quickly, but eventually, yeah. Because this also is long-term support. 120, I'd say 120. But if you like Fedex, wait a few more days and start accumulating slowly, small amounts. DraftKings, another one of those. This one, another one that got absolutely destroyed, made the stock list, went very strong, nice move up. I didn't trade that. And then actually it was very strong not too long ago, but because the market went down, it was forced down. So this is a bit like the Netflix one. It's a good bounce candidate because it already deserves to be higher. I just feel like it will get to 15, and if the market keeps flushing to new lows, easily 12, and who knows, even lower. So I think you don't buy this yet, but it's a good buy for a bounce. Finally, Tesla, not the kind of stock I would want to trade it. We've seen all these well-established names crushed. And if they turn, they can make 10% in a day. Also, the downside is, I would say, more limited compared to Tesla because Tesla's all the way up here. Tesla's a bit like a cult stock. I know cult is not the best word. I don't really mean it like that. It's just high beta. You know, if the market's, I don't know how to explain it. Tesla is still loved by those who own it. I mean, I like Musk too. He has a good following, but also with what's going on with Twitter, you know, if he loses that court battle, I think he has to pay 1 billion. If he acquires Twitter, it's I don't know, the sales behind Tesla, the fact that it's such a huge market share of all the EVs, but it's, you know, you go on the road, half the cars are not Teslas. For me, when you're trading this kind of market crash and you're willing to invest in a company, you've got to really believe in that company for the long run, because you may have to hold this stock for a while. And for me, Tesla, I don't believe that its valuations are justified. And on top of that, they're so high compared to other stocks. There's just so much downside, and it's just too risky. So I wouldn't be buying. I mean, this is definitely a sell zone. I already had this line in, so 320 below, you should be selling. Today, you had the opportunity to sell. Yesterday, even now, it's the same thing. Down 2.5% is nothing. I mean, if the market crashes, and I don't mean a huge crash. Obviously, if the market really crashes, you're gonna get it lower, but the market is going to see its lows. You know, at least the early July lows, it's going to go down 1.5% this week, maybe tomorrow, in my opinion. And if not this week, early next week. For me, Tesla will visit 280 if that's the case, and eventually 270. And if it loses this 265-ish zone, we go straight down to here, 220. So it's not a buy for me. I mean, what, you buy it, you think it's going to go here, and then Britain, no stock's doing that. Not even Apple's doing that. So why would Tesla do that? Yeah, for me, it's just a sell, period. I would just close my entire position. So yeah, I don't know why I've got Tesla here as if it's some sort of stock I want to buy, but it's just a very popular stock. I know one of my friends wanted me to cover it too, so here you go. But for me, close the position. Or what have you got in Tesla? Put it in, I don't know, maybe Netflix or Alibaba or AMD. I don't know, spread it, but I would close the position in Tesla. How much upside is there? I mean, yeah, 4%, you can go back and test 220, 320, sorry. 4% is okay. It's like a very small move. Let's say it keeps going. 15%, and you're going to get big resistance. All-time high is 35%. You could probably get 35% in a small bounce from one. Look at that. TDOC, which I don't really recommend, especially here. But I mean, just to move there is 50. There's more. This is more likely to do a 50% bounce than Tesla is to test its old high with what's going on. For me, it's risk reward, relativity, and there are better stocks out there. So anyway, I think I'll stop before I do the whole list. But today was destruction. I'll finally start with finally do these 4: Apple, Amazon, Microsoft, Google. They're pretty big. Bit like Tesla, Apple, very resilient, went all the way up here. I was saying when it was here, actually, I was not on video, but just as I drew this line, I thought, and I was surprised it pierced it, but everyone was saying it's a buy, it's going to make new highs. As usual, they get bullish right at the top. No way. You know, I don't care how good Apple's business model is. If there's a recession, people don't have money. They're not going to buy your little new phone. In fact, it's the same as the other phone. No, I don't care what products are coming out with. They cost a lot. This is not the time. So Apple for me is not a buy. I know everyone loves it, but it's not a buy. It's more of a sell. I just wouldn't touch it. I wouldn't trade it. I wouldn't short it. If it's anything, it's a sell. But it's definitely not a buy. Amazon, more realistic. I think it's going lower. I think we're going to go to 100 or 103, let's say. But I wouldn't buy it either. I think there are better buys down here. That's why it didn't make the list. So not a buy, not necessarily a sell. Tesla's more a sell. But just a nice barometer to the market. We're going lower along with the markets. Microsoft, look at that, closed below its June 16th low. That's very telling. Wow, that's very significant to me. Yeah, don't touch this. It just screams, I need to go lower, even if the market isn't at its lows. So this is certainly not a buy, certainly not yet. Google, wow, just like Microsoft. Well, these two guys alone can take the market down. In fact, they will continue lower. They'll probably bring a NASDAQ down. I'll take the S&P down. This will at least close this gap, absolutely guaranteed. Close just above 100. And that, in fact, post-market is below 100. Google's going lower, no doubt about it. Well, that's very strong support, 50. I'll never get there, though. Yeah, we're going lower, and I hope I covered some decent large caps, some that you're watching. I'll try and cover some more in the future. I hope that was useful. Thanks for watching. Good luck.